Thanks for joining us once again on the Tech Corner. I'm George Tillis, Senior Markets Contributor with the Schwab Network. Today, we're going to be revisiting NVIDIA Incorporated. Now, NVIDIA is a leading infrastructure computing technology company known primarily for its innovations in accelerated computing. The company operates through two main segments, its compute networking division as well as its graphics processing division. The compute and network segment includes data center accelerated computing platforms, AI solutions, networking, and automotive platforms. It also covers robotics and cloud computing. The graphics segment offers GeForce GPUs for gaming and PCs. Also, its RTX GPUs used for enterprise graphics and computing. Now, NVIDIA's GPUs have always been celebrated for their parallel processing capabilities, which are essential for deep learning algorithms and AI solutions. The company provides robust data center solutions that integrate high-performance GPUs, CPUs, and networking infrastructure to accelerate AI and high-performance computing workloads. Now, the core secular growth story for NVIDIA is its data center solutions, but the company also supports a wide range of industries, including healthcare, automotive, and manufacturing, with solutions tailored to specific applications. Now, let's take a look at some of the competitors once again for NVIDIA. From a domestic standpoint, we have to consider competitors like Advanced Micro Devices, Intel Incorporated, which is a major player in the semiconductor manufacturing space, and Broadcom, also known for its application-specific integrated circuit semiconductors. Other major competitors now include Google with its TPUs or tensor processing units, which are AI-specific accelerator chips. Now, when it comes to unique value for NVIDIA, it lies in its comprehensive platform strategy, a strategy that integrates hardware, software, as well as AI solutions. The company's proprietary programming model and domain-specific software libraries enable superior performance in AI model training and inference. And lastly, the company's extensive experience in investment and research and development further solidify its position as a pioneer in the industry, delivering advanced solutions across various sectors. Now let's take a look at some more recent news for NVIDIA. On February 25th of last month, the company reported its Q4 2025 financials, whereby both top and bottom line numbers beat estimates. The company said it earned approximately $1.62 per share. This is up a whopping 82% year over year and 25% sequentially quarter over quarter. Revenue also soared higher by 73% year over year, which came in around $68.1 billion versus $39.3 billion for Q3 of 2025 last year. Now, NVIDIA forecasted revenue of $78 billion for the next quarter, which is significantly higher than the previous estimates, which were slightly higher than $68 billion. This implies rapid continued growth. The data center segment grew 75% year over year, with vigorous demand from the US and European clients, offsetting losses from China revenue due to some export restrictions from the United States. Management stated that Blackwell demand remains, quote, off the charts and is currently supply constrained. The company also updated its visibility into a $500 billion pipeline for Blackwell and the upcoming Rubin platform through calendar year 2026. Now, despite the positive news in the company's most recent earnings and sales, let's also address some of the other positive attributes for the company. Now, NVIDIA's Q4 earnings highlighted effective data center growth, driven by significant demand for its Blackwell GPUs and a robust order book entering into 2026. This still positions NVIDIA as a lead architect in the AI market. NVIDIA's dominance in AI and data center GPU markets means demand from big tech, which continues to invest heavily in AI, bolstered by strong spending, suggesting long-term demand for its Blackwell GPUs. NVIDIA's financial performance is also underpinned by a strong balance sheet and significant free cash flow, enabling ongoing investments in R&D as well as strategic expansions. The company also continues to maintain a high profitability level compared to its own historical 5-year average as well as its sector peers. For example, if you look at the gross margins on a trailing 12-month basis at 71.07%, this is significantly higher than the sector median of about 49%, but also about 500 basis points higher than the 5-year average, which is roughly 66%. Net income margin is also remarkable at 55.6% of sales. This is significantly higher than the 5-year average, around 38%. This makes NVIDIA's data center infrastructure the indispensable standard for any enterprise scaling high-performance workloads for the next decade. All right, that's it for this week's edition of the Tech Corner. Please don't forget to like and subscribe, as always, to the Schwab Network. I'm George Tillis. We'll see you next week.